Every January, people say the same thing: new year, new me. And yet somehow we all fall back into the same financial patterns, the same fitness patterns very shortly thereafter. And it's not because we're lazy. It's not because we don't actually want the result, but it's because we're taught the wrong model, especially around our finances. Here's the uncomfortable truth. If you approach money the same way that the average American does, you can only expect average results. But if you want something different for yourself, for your life this year, 2026 and beyond, then it's going to take a complete revolution into a new system and a new model and a new paradigm to follow. My name is Ryan Stone. I'm the prosperity professor, and I've helped countless Americans across the country, from families, hardworking families, to business owners and real estate investors, find cash flow structures that increase their liquidity and increase their ability to choose and live abundantly. If you like that kind of vibe, make sure you like and subscribe. Today in this video, I want to talk about 4 tactical steps that anyone can take to redesign their structure to put winning as the default instead of all the financial gravity that we're feeling now that drags us back down. If you do these steps, it'll put you in the top 10% of income earners in America. And it doesn't happen by budgeting harder. It doesn't happen by chasing riskier returns. And it certainly doesn't occur by finding the next big crypto or penny stock. A real financial reset is structural. It's stepping back and asking better questions about the intentional purpose of each account, each type of vehicle, each flow of money inside your own personal economy. Is my money actually organized? Are my risks truly managed and mitigated? Is my income predictable and growing? Do my financial decisions support the life that I want to live? And do my dollars have multiple jobs to lower that financial gravity that I'm feeling as the active user in the system? Here's the problem I see over and over and over again. People are making good money. They are saving somewhat consistently, and they may even be investing responsibly the same way that everybody on TikTok or their financial gurus or advisors are telling them to do. And yet they still feel uneasy. They still feel like they have to show up every year to produce. They still feel like there may be 1 or 2 big bills or emergencies away from taking 2 or 3 steps backwards. And unfortunately, all too often, we end up finishing the year at the same place, if not worse, than when we started it. Unfortunately, if we don't break that pattern continues. And this is why you see retirees working into their 65, 67, and even 70-year-old plus ages. And that's because the system they followed isn't designed to create financial freedom. It just isn't. Money ends up scattered. It's in accounts that we can't access for opportunities. Risks are left unmanaged and completely exposing us to those financial risks. And our decisions become reactive rather than proactive and thinking ahead. A pile of money is not a plan. Safety and financial independence doesn't come from account balances. It comes from structure, and it comes from constant cash flow. So if we want to get into this financial foundation reset, we want to actually revolve the system that we're in and evolve it to something better that'll put us into winning as the default answer. And there's 4 things we need to do. Number 1 is saving properly. If you are doing what 90% of Americans are doing, where you have 100% of your income coming into the same account that 100% of your expenses are coming out of, my brother, you are doing it the hard way. Because now you're putting savings in a manual situation. So I'm going to give you some tips to make saving a little bit easier and make it a default option instead of something that you have to think about and manually do. So first step is to choose a percentage to save of every single dollar that you make. Not a dollar amount, because your income can fluctuate. You want to adopt a principle of, hey, there's a certain percentage of my income that I put away for the future every single time I get paid. I typically tell my private members to shoot for 20% to start, depending on your age and depending on your need. Now, if that percentage is a little bit too high for you, cool. Start with 5. Work your way up to 10. Work your way up to 15 and 20. And before you know it, it will be a lot easier than you think. If 20% is a little too low for you, you could do more. All the power to you. But the important thing is to adopt a principle and abide by it. Okay. This is the absolute first step. If you do this step, if you religiously abide by the habit of every time you get paid, moving a percentage and paying yourself first before you pay everybody else, it will massively change your life, even in the first 30 days. But expand that out to 60, 90, and 12 months, and it's pretty impactful. Well, what about those folks that say cash is trash? Well, Don't listen to them. Despite what many social media financial influencers may tell you, cash isn't laziness. Cash is flexibility. Look at Warren Buffett. He's arguably the best investor of our time. He is holding hundreds of billions of dollars in cash right now. Now, obviously, we don't have hundreds of billions of dollars, but make it relative to you. We need to have surplus funds ready for opportunities, ready for deployment to create more cash flow for ourselves. And if we're putting our savings or investments into accounts that we can't access, then that money is actually not working as well or as multidimensionally for us as it could be. Now, so how do we put saving a percentage on a default? Well, many bank accounts nowadays can help you create buckets. If you get a direct deposit from your income, you can actually have it sequestered into different accounts or have a percentage taken out and moved to different accounts. For all my private members, we use a proprietary software that leverages a high yield checking account, and we use that as the reservoir. So now 100% of income comes into the reservoir, not our checking account. And that allows my private members to intentionally choose how much of every income they actually want showing up in their personal checking. And what this does is it flips the entire savings model on its head, where now you are saving as the default. Money comes in and only a specific amount comes out to your checking for living, consuming, doing your own personal investments outside of that, or giving it away. If you want some help with that, feel free to reach out. But if you're shy, just take the onus on yourself and create some kind of rigid system that is going to force you to automatically be putting a percentage of every single dollar you make away for the future. So first pillar is saving. Second pillar is really reconsidering your investments and making sure we're investing for cash flow and meaning, okay? Investing shouldn't feel like gambling. It shouldn't feel like a hope and a prayer. Every single dollar should have a job. Some dollars are going out to create income. Some dollars are there for growth. Some dollars are just on the sidelines waiting for opportunity. Some dollars are sent to deals to get tax advantages to offset all the capital gains in other places, right? If your investments don't support your life right now today, they're just numbers on a screen. Thinking intentionally about your investments means thinking about the end game. If I put all my money into a 401k, how am I actually going to get that money out? If I'm saving in an IRA or a Roth IRA, how am I planning to get that money out? If I'm putting money into crypto or into brokerages or into cash value life insurance, how am I going to multi-leverage that vehicle and get more dimensions on my dollars? When we start thinking about it that way, instead of just sending money to collect dust in an account, yes, it's growing and there's some appreciation, but there's a lot more options to that. And if we only look at investments with a singular dimension, then we're throwing away potentially tens, if not hundreds of thousands of dollars in opportunity cost by doing it a better way. So just to recap, first step, make sure we're saving at least 20 or more percent of every single dollar we're making. Secondly, as we're starting to increase our war chest of opportunity funds, we're deploying those funds into investments that help with cash flow, tax advantages, appreciation, future equity, but then using those assets to continue and perpetuate our growth. The third pillar is one that a lot of people avoid, and that's making sure you have completely mitigated financial risks, wiped it off the table. There's really three. There's liability, disability, and death, okay? And the important thing about financial defense is you have to get it right the first time. You don't get any do-overs. Point in case, if let's say you're driving down the road and boom, you didn't see your phone drop into the crack of doom next to your chair and you smacked into a doctor. He's a surgeon. You bunged up his hand in the accident. What's he going to do to you? Sue you, right? And how much is he going to sue you for? He's going to sue you for everything that he could have made as a doctor before you bunged up his hand. Well, that's a lot. And so if your car insurance company is behaving, they'll pay out their liability limit, you'll pay out your deductible, and then you'll be liable for everything over and above that. This is where I talk to my private members about personal liability or umbrella policies, making sure that that's sitting on top of all of your other liability policies with your property or your auto. And the cool thing about those policies is they're very cheap. They're very, very cheap, but you have to get it before you need it. Same thing with your property insurance, right? Your house can't burn down to the ground, to the stakes, and then you call State Farm and say, you know what? Actually, I do want full replacement value, not just the active cash value. Same thing with being disabled. Let's say you get hurt in that car accident with the doctor, and now you can't go to work. Well, who's going to pay your income? Not just the medical bills, but the wages lost from you no longer being able to do your work. This is where disability insurance comes in. And all of these things can be taken care of very simply, very cost effectively, but you have to get it before you need it. Too many times I have people call me, hey, I just got this diagnosis, or I just had this accident and now I want the coverage. Like, sorry, dude, you're out of luck. Everybody crosses a line at some point in their life where you're no longer insurable for that risk. Doesn't matter how much money you have. And so it's important to just take the onus and put it on your shoulders, be proactive and think ahead and put that down. One of the biggest parts of this, and this is especially important for those that have others depending on them and you actually care about those people, is life insurance. It's a very polarized topic in finance. Some people say buy term, some people say buy permanent. And the problem with that is it confuses consumers so much that they don't do anything. And so then they end up passing away, or they get so disabled that they wouldn't be able to qualify for the coverage, or so ill, or get a diagnosis. And now the option is off the table. The unfortunate truth is one uncovered risk can take you back 10 to 20 years in your financial process. So mitigate these risks, get rid of it, get proper liability protection, 1-to-1 ratio between your entire net worth and the liability protection. Make sure your disability insurance is in place. If you have it through work, cool, read the fine print. If you don't have it because you're self-employed or you run a business, cool, reach out and we'll make sure you get it covered. It's very cost effective and you'll be very happy that you have it rather than you don't. Same thing with life insurance. How much should you get? As much as you would want to come in to your wife, spouse, business partners, beneficiaries, and dependents if you were to leave this world tomorrow. And so a simple calculation for that is to take your income, take your age, subtract your age from 65 and multiply it times your income. That's how much you're worth at a bare minimum. And if you're healthy enough, you can qualify for that amount. And again, it can be very, very cost effective and far more cost effective than the risk occurring in your life with you not having the coverage. All right, so let's recap. Number one, we're saving at least 20% of our income. Number two, of our war chest, we're investing into things for cash flow, tax advantages, and multi-dimensions. And step three, we have risks completely wiped off the table. We have liability protection, we got disability protection, and we have our life insurance in place. So let's get to pillar number four. And this is a little bit more abstract because inevitably, I believe if we don't know which way we're going, any road will get you there. So before we start thinking about our investing, or before we start even thinking about where we're deploying the savings, the most important thing you can do is to really think inwardly. And maybe you do this with your spouse or with your kids if they're a little bit older, but think inwardly about what do you want your life to look like? And the more that you can start to imagine it and really write goals down and really talk it into existence, the more you'll be focused on it. And so then when you have surplus funds in your savings, because now you're saving 20%, or now you have runoffs from your investments, because we're not just throwing them into accounts that lock it up till age 59 and a half. Once we have these forces lowering the gravitational force of just life, buying things that are expensive, things break, the car needs a repair. When we have these surplus funds and we have our investments working for us and we have a purpose-driven life, it makes things so much easier to make financial decisions quickly, take advantage of opportunities, and not feel regret at the end of the year like we have for so many years in the past. So I hope this video was helpful. I hope you have an absolutely incredible year. Definitely make sure you follow and subscribe for more, because we're going to give a lot more tactical tips on how to create guaranteed pensions for yourself, how to create cash flow for yourself, how to grab tax advantages out of what you're doing right now. And my mission is to help you at home put more money in your pocket so you can live more abundantly and live a prosperous life. I'm Ryan Stone, the Prosperity Professor. You can find me on all social media channels. I'll see you on the next video.